Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Do you shop at Costco? Do you like their $5 rotisserie chicken? Have you had KFC's chicken? Have you ever had McDonald's chicken or Wendy's chicken? Have you tried Chick-fil-A? Have you ever bought chicken at Walmart or Kroger? Then you have tried Pilgrim's Pride chicken. But why chicken? Well, have you heard of Golden Goose? It's an asset, it gives us eggs, and it's delicious. Warren Buffett, the world's best investor, just turned 94 years old. He always tells us to treat stock buying like owning a farm or a piece of a business. Today, I will be introducing to all of you a hidden gem of a chicken farm stock that no one is talking about, but everyone has tried their chicken. A stock that is outperforming the market. That's not all. This stock year to date and 1 year performance is outperforming Jeremy's Meta stock. Jeremy always says that his Meta stock is such a great value, has such a low PE ratio. Well, this PPC stock is currently traded at a PE of 14 and a forward PE of 11. Yes, it's cheap. I think we are at the cusp of a major upcycle of this stock. We are going to dig deep into the 10K of this company like Warren Buffett does every single day. All he does is read, man. Well, I am going to do the research.
But you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them. And you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it. There have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. You've got to be in the right psychological position. And frankly, some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And
at the end of this video, I will let you know if I'm buying this PPC stock or not. Do you want to be Gustavo Fring, owning a pollo's business? Well, let's jump right into that hot, bubbly, yummy chicken oil. Just kidding. In 2021, Jeremy used to love talking about a stock called Tattoo Chef. He said one day this $1 billion vertically integrated plant-based frozen food company is going to become a $10 billion food giant.
How I'm going to make $10 million plus on Tattooed Chef stock over the coming years, and I'm going to go into detail on exactly how that happens.
Well, that dream failed as TTCF stock went to zero.
And this could be one of those stocks I don't ever sell. I'll just be completely honest, because when you buy into a great food company or drink company, it's usually best to just hold them. Just hold them, because over time, they will become a dividend cash flow beast for you.
However, owning a food giant is not a dream. It's actually easy. You just click a button and buy it. Buy! So allow me to introduce you to the real food giant stock you want to own. A vertically integrated global chicken and pork producer that is called Pilgrim's Pride Corporation. Founded by Lonnie Bowe Pilgrim in 1946, it exited bankruptcy in 2009. Today, Pilgrim's Pride is primarily engaged in the production, processing, marketing, and distribution of fresh, frozen, and value-added chicken and pork products to retailers, distributors, and food service operators. They have customers across the US, the UK, and Europe, Mexico, and in over 115 other countries. Their sales efforts are largely targeted towards the food service industry, principally chain restaurants and food processors such as Chick-fil-A and retail customers, including grocery store chains and wholesale clubs such as Kroger, Costco, Publix, and Heb in the US, chain restaurants such as McDonald's, and grocery store chains such as Sainsbury, Tesco, and Waitrose in the UK, and Europe, and grocery store chains such as Walmart in Mexico. As a vertically integrated company, They are able to control every phase of the production process, which helps them to manage food safety and quality, control margins, and improve customer service. Their plants are strategically located to ensure that customers timely receive fresh products. With their global network of approximately 4,800 growers, 34 feed mills, 47 hatcheries, 39 processing plants, 30 prepared foods, cook plants, 27 distribution centers, 10 protein conversion facilities, and 5 pet food plants. They believe they are well positioned to supply the growing demand for their products. Their fresh products are 80% of their sale in the US. They consist of refrigerated, whole or cut up chicken, frozen whole chickens, breast fillet, and prepackaged case ready chicken. And in the UK, fresh are only 20% of their sale. Primary pork cuts, added value pork, and pork ribs. Of course, the US is their biggest market. The company utilizes various raw materials in its operations, including corn, soybean meal, and wheat, along with various other ingredients from which the company produces its own formulated feeds. In 2023, corn, soybean meal, and wheat accounted for approximately 43.9%, 38.1%, and 4.1% of their feed costs, respectively. The production of feed ingredients is positively or negatively affected primarily by the global level of supply, demand for feed ingredients, the agricultural policies of the US and foreign governments, and weather patterns throughout the world. Live chicks, the company's chicken operations purchase one-day-old chicks from a few major breeders. These chicks, when mature, serve as a grandparent and parent stock of the broilers that these operations process for consumption. Seasonality. The demand for their chicken products generally is greatest during the spring and summer months and lowest during the winter months. The demand for their pork products generally is high during the summer and peaks during the winter, primarily due to the holiday season. Key customers. Their two largest customers, which operate in the US, together accounted for approximately 13.2% and 12.8% of their consolidated net sales in 2023 and 2022. No single customer accounted for 10% or more of their consolidated net sales in either 2023 or 2022, so no concentration risk. Competition. The chicken and pork industries in the US, the UK, continental Europe, and Mexico are highly competitive. Pilgrim's Pride believes that being a vertically integrated chicken company and having fully integrated supply chain in the pork business provides them with long-term cost and quality advantages over non-vertically integrated and other processors. They utilize numerous advertising and marketing techniques to develop and strengthen trade and consumer awareness and increase brand loyalty for consumer products. They believe their efforts to achieve and maintain brand awareness and loyalty help to achieve greater price premiums than would otherwise be the case in certain markets and support and expand their product distribution. They actively seek to identify and address consumer preferences by using sophisticated qualitative and quantitative consumer research techniques in key geographic markets to discover and validate new product ideas, packaging designs, and methods. Although poultry and pork are relatively inexpensive in comparison with other meats, they compete indirectly with the producers of other meats and fish, since changes in the relative prices of these foods may alter consumer buying patterns. Now let's look at the management Fabio Sandri, age 52, was named the Chief Executive Officer in September 2020 and previously served as our Chief Financial Officer from June 2011 to March 2021. This is what the CEO said. "We are one of the largest protein companies in the world, and as a vertically integrated company, we are able to control every phase of the production process, which helps us to manage food safety and quality, control margins, and improve customer service. This gives us the opportunity to continue to create growth and development opportunities, further increasing our position as a leading domestic and global protein company." In the most recent quarter, Pilgrim's free cash flow exploded from their same quarter last year. Their gross margin and the profit margin almost doubled. They are actually buying back their shares gradually. The shareholders' equity has been going up nicely as well. The reason for this outperformance is that in the US, year-over-year increase in commodity market pricing and moderating input costs positively impacted Big Bird business, along with growth with key customers in case ready and small bird driving operating income improvement for the US business. In Europe, significant year-over-year profit improvement due to operational efficiencies and cost reductions. And in Mexico, profitability increases due to improved balance in supply-demand dynamic. So PPC stock, is it a buy for me? Yes, it is. By looking at the chart, the technical analysis tells me that the longer the stock goes sideways, the bigger the move it's going to get. PPC stock has been consolidate in this range of box from $15 to $38 for the past decade. Now it has finally broken out of that box. This big bird is set to fly.